This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on February 12th, 2016. It's a long weekend in Canada, Family Day here in Alberta. Down in the United States, it's President's Day on Monday. Don't forget, if you ever miss a radio show, we run on 6:30 CHED Sunday afternoon at 3. If you ever miss a show, they're archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in The World Financial Report on Radio. You'll find us there. We go anywhere on your portable device. Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com, 1-800-432-1022, our featured diamond of the week. And this is a beauty, it's actually a big, chunky diamond, 2.09 carat, emerald cut, fancy, vivid, yellow, internally flawless. We're going to talk about the rarity of yellow diamonds right now later in the show. We have a story for you, but go to rarecoloreddiamonds.com, see our featured diamond of the week, 2.09 carat, emerald cut, fancy, vivid, yellow, internally flawless. It was a crazy week. In fact, it almost had the feel of the financial crisis back in 2008. Very volatile, stock markets plunging. Stocks, and this includes a lot of the European banks, the question was, are they going to be solvent? In fact, financial stocks in Europe are back to 2008 levels. Credit Suisse, 27-year low. One of the things that rocked the market at the beginning of the week was Deutsche Bank. There were concerns that they may not be able to repay their bonds. So major concerns about the solvency of banks over in Europe during the week. And it really did have a financial crisis feel to it. The oil market, we saw oil down to almost $25. There were concerns about the banks in China and economic numbers coming out of China. Negative interest rates, that was something that was talked about a lot, not just because Sweden went further negative. They're already negative, but they went even further negative to a 0.5 percentage point negative. But Janet Yellen, she goes in front of Congress in the United States twice a year. She's questioned by the House and the Senate. Lots of questions about negative interest rates. And we saw gold yesterday on Thursday, big day. It was up at $1.60. And Harold, as we head into the long weekend, give us an update from your perspective. But when the information was coming in throughout the week, it really had a crisis feel to it, just because of all the different things that were happening and the concerns about the European banks and their solvency.
You bet. It definitely felt like 2008, and it's not over, obviously. So what we have today, after a huge week in the markets for gold, the thing about gold is that gold is a flight to quality. Gold is everything that you need when the markets are like they were, volatile, uncertain, and dangerous, basically. So, gold, we've been saying that gold was going to go down to 1,000. It hit a low of 1,050 a couple months ago. And basically, the rally that we've seen the last couple of weeks has been tremendous. The fact is that we broke $1,200. 1180 was resistance for gold. It broke through 1180. It took a little while to do it, but it did get through it. 1200 was really no problem, and we've had two closes above $1,200 gold. On Thursday, we hit a high of over 1260, but as we're taping the show today, the gold market's down about $13. We're trading at 1238. The very important number for gold, the number that would really get me thinking that gold is really going to start to rally again, is 1380. So we still have $150 left before we break 1380 in gold. And if we did get two closes above 1380, that would tell me that the bear market in gold basically is over. But I really don't believe it is at this point here because, again, with all the volatility in the market, the U.S. dollar came down to 96 cents that is trading at right now. The high that we saw was par, which is only 4 cents higher than where it is at this particular point. So with everything happening in the currency markets, the futures markets, everything, the U.S. dollar is still pretty well the strongest currency. And I don't see that changing at this particular point because, all the other countries are doing worse than the United States. We know that Europe is in huge trouble and the banks are in huge trouble. In fact, the banks in the United States are not doing well. They never did. After 2008, we never saw the recovery in the bank stocks that they were hoping for. In actual fact, you looked at a bank like Citibank or a bank like Bank of America that traded in the $60 to $80 range, basically came all the way down to below $5 during the crisis in 2008, but only traded up to $13 a couple weeks ago. So we haven't seen the recovery in the bank stocks. And now all this talk about negative interest rates is really going to hurt the banking society because nobody's going to want to keep any excess money in the bank if it's going to cost money to keep it there. The problem is the banks are doing so poorly that negative interest rates brings in additional income for the banks. So, again, we're going to have to see what happens over the next few weeks. My prognostication is that everything is going to calm down a little bit. Gold is going to back off. The currency markets are going to come back a bit. Crude oil, which was down to $25. We've been saying that crude was going to go to 20, 22 in that area. We did hit $25 briefly. Today we're trading at $27.96, up $1.75, and that's partially due to an oversold oil market, but also due to the fact that there are some rumblings that there may be something with OPEC that they may decide to cut production. Now, the fact is that all these OPEC-producing nations are in such dire straits for money at this point here. They're just pumping as much oil as they can because they need the money, even though they're pumping it at a loss. So at this particular point, the Dow is up 160 points at 15,818. I do not see that the Dow is going to continue to rally. I see it's going to be extremely volatile. The NASDAQ has really gotten beaten up. As we know, the NASDAQ broke back over 5,000 finally, and it's now trading at 42.93. So the NASDAQ really got killed this last week. The TSX also is down to 12,224. It's up 137 points today. But again, the stock markets of each country reflect the economy of that country. And again, we know what's happening in Canada at this point with low oil prices and an extremely weak Canadian dollar. It's extremely difficult for things to get back on track in Canada at this point. U.S. dollar is up 40 points at 96 cents, and I do anticipate that the U.S. dollar will continue to run, again, break par, and I'm sticking with our numbers of 108 to 110. I do believe that the best situation right now is in the United States, and you do want to get some of your money into U.S. dollar-based investments. I know the markets are extremely volatile, but the fact is that if oil stays low, so will the Canadian dollar, and unfortunately, so will the Canadian economy. Most of my best clients are up in Canada. A lot of them are in Alberta, and I know how badly my friends and clients are suffering up there, and my heart goes out to everybody out there. You know, the fact is that we have no control over what the decisions are made for the marketplace, and certain things are done, and we have to live with what the ramifications are. We've always known that oil was going to drop, and a lot of my clients made a fortune shorting oil, shorting the Canadian dollar, going long the U.S. dollar, and actually made a lot of money shorting gold. Now, again, I do believe that gold is going to fall back. At this point, it would have to break 1380 in order for me to be bullish on gold again, and I just don't see that happening at this point unless, again, something dire happens in the United States. And if that does happen and the banks start to go under here, but again, we don't have negative interest rates here. So at this particular point, I just don't see that happening. So again, we had a strong rally in the price of gold, a strong rally in the price of silver. Both markets are down somewhat today. Silver's trading at $15.84. There's resistance at $16 in silver. We traded as high as $15.91. So, again, we'll see what next week brings. But all in all, I do believe that the market will remain extremely volatile. We could get further increases in the price of gold and silver over the next week or so. But, again, if it doesn't break 1380, I do see the market falling back.
Connect with Harold at rarecoloreddiamonds.com. We're living in a very volatile world, financially, economically, and geopolitically as well. And if it's confusing to you, Harold will take the time to sit down with you over the phone and explain the ins and outs of different opportunities that he has for you to protect the money you have and profit at the same time. One of the ideas, rare colored diamonds. Harold's website is rarecoloreddiamonds.com. The telephone number, 1-800-432-1022, to speak personally and privately with Harold about investing in diamonds. And one of the stories that we have in our free weekly newsletter, get our free weekly newsletter from Harold. rarecoloreddiamonds.com, 1-800-432-1022. A report coming out saying, and we've heard this many times, due to the extended level of stock prices, we could see over the next 10 years, and even with negative interest rates or very low interest rates, it's going to be difficult for anybody to make any money whatsoever. So much for Freedom 55. How about Freedom 85? Harold has some interesting ideas on how you can make money starting today. Connect with him, 1-800-432-1022, rarecoloreddiamonds.com. Featured Diamond of the Week, 2.09 carat emerald cut, fancy, vivid, yellow, internally flawless. One of the top stories from our free weekly newsletter, Citigroup came out and said, fear the Oilmageddon recession. Financial markets are trapped in a death spiral, according to analysts at Citigroup. The bank's research team described a negative feedback loop. In the global economy and across the financial markets, it is fueled by a strong U.S. dollar, lower commodity prices, weak trade, and declining growth in emerging markets. The four forces are interconnected and present central banks with the difficult task of fighting deflation and staving off yet another global downturn. If the loop continues, Citi warns, the world could slip into significant and synchronized global recession. The bank even invented a new term for the doomsday scenario, Oilmageddon. It seems reasonable to assume that another year of extreme moves in the U.S. dollar higher and oil and commodity prices lower would likely continue to drive this negative feedback loop, according to their analysts. Corporate profits and equity markets would also likely suffer further downside risk in this scenario of Oilmageddon. And that was one of the big stories during the week. When Harold was on Fox Business News, he was interviewed by Bloomberg many years ago. And then Deirdre Bolton, who interviewed him on Bloomberg, made the switch to Fox Business News, and she invited Harold to come on and talk about investing in diamonds and Harold's auction site. And Harold went on, mentioned China, and said that there were a lot of problems there, and Harold was bang on. In fact, coming out this week, hedge fund manager Kyle Bass, who nailed the subprime crisis, says China's problem right now is 4 times as big. And he is the founder of Heyman Capital. Kyle Bass, he's also a huge opponent, actually, of obviously debt, but proponent of investing in hard assets like gold. He sent out his first letter to investors on a global scale in 2 years. The letter warns that China has a problem much bigger than the subprime crisis in 2008, and he was one of the people that really made a lot of money off the mortgage crisis. The problem in China, according to Bass, is the banking system and its coming losses. And he goes on to write, what we now have come to realize through discussions is that many of the banks have come to their conclusion without fully appreciating the size of their banking system losses and the composite of assets at individual banks. More importantly, banking system losses could exceed 400% of the U.S. banking losses incurred during the subprime crisis, and things could really start to accelerate. Another concern, according to Bass, is China is running out of money. And we've heard this before, that their reserves are down, already below a critical level of minimum reserve adequacy. In other words, China is currently out of the required level of reserves needed to safely operate its financial system. The view that China has years of reserves to burn through is misinformed. China is back. Basically, they're completely up against the wall. Their back is, which was one of the primary reasons while the government is hypersensitive to any comments regarding its reserve levels or a hard landing. Bass is among a handful of hedge funds betting against China's currency, the yuan. And Harold, you were right about China, and we've touched on this in past shows, that China has a massive banking system. And even if they get just 10% losses, you're looking at millions, billions, trillions of dollars potentially. And if that happens, they're going to have serious problems. And if there is liquidity problems in the banking system, that leads to financial crises, as we saw in 2008 in North America and around the world. So, Harold, you were correct. And one of the things that we talked about off the top of the show, we know that European banks, their solvency is in question. So, Harold, the time that we're in, here we are again. And I mentioned this on a past show that I have that feeling that we're potentially heading towards another financial crisis. And it seems that we are, based on some of the facts that we're seeing on a weekly basis.
It is quite frightening because we know that when these type of situations happen, there's other forces out there that could really wreak havoc on the market. And one of them we've talked about, for years now, which is the derivatives market. And that's probably the most frightening situation that we're confronted with, because as these markets sell off, it triggers stops and other sell-offs in the marketplace. And again, you can find that the derivatives market, which is probably the most concerning and frightening market in the world today, it's unregulated, and it's in the quadrillions of dollars. And back in 2008, when Lehman did go under, it was really the derivatives market that caused the markets to plummet as quickly as they did. So that's another thing that we have to be concerned about. We've always said to own precious metals, to own hard assets like gold, silver, diamonds, art, classic cars, those type of things in this type of an economy. When the markets start to sell off in the stock market and the paper asset market, like we've seen this week, it's almost like a freight train on the loose, and people get petrified because, unfortunately, most people keep most of their money in the mutual fund and stock markets. Your retirement savings plans are at risk, and everything that you've got in the market is at risk. And again, we've seen it many times. It happened in 2008, it happened in 1999 and 2000. And it's happening again right now. So I'm not positive that at this particular point that we're back into another 2008 style situation, but if we are, watch for them to start printing money again. Watch for that to start to happen. And again, you'll start to see a repeat of what happened in 2008, where the markets really took off. In fact, don't forget, during that period of time, gold went to $1,900 by 2011. So at this point here, I do not believe that we're in the severity that we were back in 2008, but we are monitoring it very close. And again, we watch the markets to see the support and resistance levels to see if the gold market and the silver market is doing what they're supposed to be doing. Right now, the gold market is doing what it's supposed to do. It's responding to financial issues all over the world. And again, we've seen a massive rally of about $200 on the price of gold. It shows you how quickly that market can turn around. So at this particular point, it's very, very difficult to make money in the markets today. The stock markets are just a gambling casino. Most people that trade the stock market lose some, if not all, of their money. On top of that, the commodity markets are extremely volatile. The oil market is volatile. We have private investments that are doing extremely well, but they're outside of the mainstream. They don't trade paper. They don't trade in stocks. These are physical investments that my company and I have made that we include our Canadian clients into, and they're doing extremely well. In fact, one in particular is returning over 25% a year. So if you're not making anywhere close to that money, and let's face it, most people are not, you should get in touch with me. I'll explain to you what we're doing. And again, it's a safe investment. So even though the payouts on it are high, it's a private investment dealing with my own business. And again, my Canadian clients, it's been a salvation for them because a lot of my best clients are up in Fort McMurray, and we know what's happening up there. And my heart really goes out to my friends and clients out there that are suffering as badly as they are. But fortunately, many of them are in investments with us that are doing way better than the mainstream. So again, If you're curious and you are not doing as well as we're doing at this point, you need to give us a call and I'll sit down with you. It doesn't matter. You do not have to be a financially wealthy person in order to invest with us. Most of our clients are just hard-working, everyday Canadians that just need a break. They need to do better than 1% in the bank and putting your money in the stock market where you're going to lose most of it, if not all of it. So give us a call and we'll go over what our programs are. And if it's comfortable for you, I think you'll find yourself in a very comfortable position dealing with my firm.
1-800-432-1022. The call is free. And anytime you speak with Harold, it's confidential, 100% confidential. 1-800-432-1022. Connect with Harold as well at rarecoloreddiamonds.com. Our featured diamond of the week is a 2.09 carat emerald cut, fancy vivid yellow, internally flawless. Second half of the show, we're going to talk about yellow diamonds and how scarce they are. Jim Grant, famous for his interest rate observer, says in the United States, they're already in recession. I think the Fed was trying to do the right thing, but it turned out to be the wrong time, Grant said. I think the Fed missed its mark. And he's talking about them raising rates and saying they would raise rates in 2016 4 times. Janet Yellen came out when she was interviewed by Congress and said, well, a lot of it will depend on what's happening in the United States and around the world. Grant goes on to say, growth concerns have impacted the markets, but the United States is already in recession. I think we're in one. I think there's a defensible case to be made that a recession began late last year. Grant, who previously said that the Fed will be forced to backtrack on its December rate hike policy, noted that the central bank doesn't control all rates. He says that it influences all rates, and it has been for the downside for many years. Grant says the consequences of that influence is the mispricing of risk and misallocation of capital. If you'd like to find out more, read our free weekly newsletter. We can send it out to you via email free of charge. Connect with Harold, rarecoloreddiamonds.com, 1-800-432-1022. We touched on a little earlier in the show negative interest rates in Sweden. And they went to negative 0.5%. It's creating a housing bubble in Sweden. And we have a whole section in our newsletter about negative interest rates. In fact, the world's negative yield bond pile now totals $7 trillion. Janet Yellen was asked when she spoke before Congress this week about negative interest rates, and she said, we wouldn't take those off the table, although there is possibly some legal ramifications if they went to negative rates. They don't know if it would be against the law in the United States. So the United States here, even in Canada, our banker, head banker Pelosi, talked about negative interest rates. So it's something that's being discussed all around the world, and that is a positive for hard assets. We're going to come back and talk about diamonds and more hard assets as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on February 12th, 2016. Our time is 9:05 Mountain. Our radio show runs on 6:30 CHED Sunday afternoon at 3. We have a podcast through iTunes. Type in The World Financial Report on Radio. You will find us there. We are portable. We go on any of your portable devices. We also have the show streaming live, archived on Harold's 2 websites, HESradio.com, rarecoloreddiamonds.com. If you ever miss a radio show, it's the long weekend here in Canada. Obviously, in Alberta, we have Family Day, and lots of other provinces have a day off as well on Monday. They have different names for it. In the United States, it's President's Day. And when you watch what's happening with the Democrats and the Republicans in the United States, I don't know who would want to be president because it's a thankless job. And who knows, there may be a Canadian president if Ted Cruz won, a Canadian born in Calgary, the first Canadian president, Ted Cruz. Connect with Harold at rarecoloreddiamonds.com, 1-800-432-1022. Harold's website for auctions, hsfineauctions.com. Our featured diamond of the week is a 2.09 carat emerald cut, fancy, vivid, yellow, internally flawless. See this diamond at the website rarecoloreddiamonds.com, featured diamond of the week. And Harold, one thing we do know is in this environment with negative interest rates, people worried about solvency of banks, that's where hard assets shine, in particular diamonds.
You better believe it. And all you have to do is look at this week's featured diamond to know why. That is one of the most beautiful diamonds I've ever seen. It is so ridiculously rare for several reasons. First of all, the color. The color is spectacular. It's the best that you could possibly get. There is not a better color yellow that you could possibly own. Because the way that the GIA, Gemological Institute of America, grades yellow diamonds is that, forget the faints and the very lights and all that, but you start getting into the fancy lights, and those are known as canaries. Then you've got the fancy yellows. Then you have the fancy intense yellows. The odd time a fancy deep yellow will come out, very, very seldom, but the best that you could possibly get is vivid. It's got the highest saturation of color. And then there's 10 different levels of vivid, just as there's 10 different levels of intense and fancy. So this diamond not only is a fancy, vivid yellow, but on a scale from 1 to 10, it's a definite 10. It's one of the most beautiful yellow diamonds I've ever seen. So we know the color is the best you could possibly get. Then look at the clarity. When GIA grades a diamond, internally flawless is the highest grade that you can get. Then it goes to VVS1, VVS2, VS1, VS2, SI1, 2, and 3, and I1, 2, and 3. This diamond is internally flawless, the best that you could possibly get in the clarity department. So it's got the best color, the best clarity, it's internally flawless, and then look at the cut of this diamond. It's not only an emerald cut, but it's a square emerald cut known as an Asher cut, the rarest of all emerald cuts. So this diamond is got the most amazing cut that you'll ever see on a diamond, along with the rounds, the two rarest of all cut diamonds. Then you've got the best clarity, you've got the best color that you can possibly get, and then the size of it is the last part of it. Because size-wise, it's over 2 carats. And only one diamond in 15 million is over 2 carats. And I can assure you, none of them are the quality of this one. So this is a very large diamond, over 2 carats. It's the best color, which is fancy vivid. It's the best clarity, which is internally flawless. And it's the most amazing cut, which is a square emerald cut known as an Asher cut. This is a true investment diamond, one that will do nothing but go up in value. In fact, to get a diamond like that today would be nearly impossible. So it's a diamond I recommend extremely highly, and especially in a world that we live in today, where you're seeing your stocks plummet, your retirement savings plans are doing nothing, and they haven't done anything for 10 years, but you buy a diamond like this and invest in that and put it away for 10 years, and you'll do way better than you would ever do in stocks or any paper asset. So it's just an outstanding diamond, very proud to show it, and it is one of the most beautiful diamonds you'll ever see. It could stay as a loose diamond, or you could put it into a ring. We could do that for you, or into a necklace. But all in all, it's just an absolutely spectacular diamond. You know, in the type of world that we're living in now, with such volatility and so many people that lose money trading in the stock and commodity markets, this is a very, very important asset. It's portable private wealth. Nobody knows that you own it. You can travel with it. You cannot do that with any other asset. You can't travel with a Van Gogh. You can't travel with more than $10,000 or $5,000 in cash, or stocks, or gold, or anything like that. And why would that be important? Because just look at how the world economy is going. People are going bankrupt every single day today because, again, they've got their assets in the wrong areas that they thought were safe, but obviously are not. When you can see the Dow and the NASDAQ drop as much as they have over the past couple weeks, it's a frightening situation. And most people will not pull the trigger. They'll not say, oh, my God, this is just getting too risky. Let me just sit on the sidelines for now. They just sit there and wait for the market to come back up. and say, when the market comes back, I'll get back, I'll sell out and sit on the side, but that day never ever comes. So the fact is that there are certain investments that do extremely well and make a lot of sense during these volatile times, and rare colored diamonds happens to be one of them. Yellow flawless diamonds, if they're fancy yellows, fancy intenses, they go up by about 15% a year, no matter what the market does. So that in itself returns more than stocks do, and obviously putting your money in the bank at 1%. So just holding on to a yellow flawless diamond for 15, 20 years and putting it away for your future makes a tremendous amount of sense. In fact, I've put those type of diamonds away for my grandchildren. I've got 4 grandchildren that are all under the age of 12, and they all have diamonds put away for the future, where I do not have one bit of stock put away for them. Just not a believer in it. I'm a believer in hard assets that you hold on to that could be sold in other currencies and that could become portable private wealth if you needed it to be. So we've covered the yellow flawless diamonds. It's extremely important to own them. They start at about 20,000. We have diamonds that go up to 40 to 50 million, depending on what you want to invest. The majority of our clients invest under $250,000. In fact, many invest well under $100,000. You can get into the diamond market and own a rare colored diamond like a fancy yellow flawless for 20 to 25,000. And you're much better off putting your money into that type of diamond than you would going into the stock market. You're never going to lose your money owning a rare colored diamond, but you could definitely lose your money putting it into stocks. The other diamonds that you should be very seriously looking at right now are pink diamonds from the Argyle mine. The Argyle mine in Western Australia produces 95% of the pink diamonds in the world today, and that mine is going to close before 2020, which is only 4 years from now. We anticipate that the price of pink diamonds can increase anywhere from 2 to 5 to 1,000%. That would be 200 to 500 to 1,000%, depending on which diamonds you own. If you happen to own fancy, vivid pink Argyles, they will go up the most because they have the highest saturated color. But the fancy deep pinks go up tremendously, the fancy intense, and the fancy pinks. So, again, we're at a time when most people are concerned about their financial investments, and you should be. The fact is, if you sit there and do nothing, you're more than likely going to lose a lot more money than you anticipated losing. Sometimes you're much better off sitting on the sidelines and waiting for the market to correct and then going back in, as opposed to just sitting there like a deer with the headlights on type of thing and losing all of your money. Then you have nothing left in order to get back into the game. You're much better off being conservative than you are taking risks at this particular point, unless you're an expert at trading these markets, which most people are not. 90% of the people that trade stocks and commodities lose their money. We're very, very bullish on the hard asset market, and my company also deals in rough diamonds, uncut rough diamonds from the mines. We have very profitable investment programs that are private to our company and to our Canadian clients that do extremely well, that pay 25% or more. Why would we do that? Because it's something that I've done with my clients for over 35 years now. My clients were with me when I first started in business. My clients invested with me when I grew my company into the largest brokerage firm in North America. My clients were with me when I first broke into the gold and diamond business. When I first started recommending gold 16, 17 years ago, everybody laughed at us. Gold was at $250, and nobody felt that gold was a viable investment. Lo and behold, gold went from $250 to $1,900, one of the biggest bull markets of all time, and that was something that my company called on the radio in front of everybody when nobody in the world thought that we were right. We did the same thing with oil. We rode oil from $18 all the way up to $150. So we've got a tremendous track record. Are we right all the time? Absolutely not. But we're right a lot more than we're wrong. And I've been in the business 35 years and know the commodity markets extremely well. And I consider diamonds a commodity. And the fact is that 95% of the pink diamonds in the world come from the Argyle mine, and that mine is going to close. It doesn't take a Rhodes Scholar to realize that when 95% of a particular commodity is going to be gone, that commodity has an excellent chance of increasing in price. In fact, Economics 101, when demand is high and supplies are low, the prices go higher, and that's what's happening in the diamond market at this particular time. Again, we have private investments that are outside of the mainstream investments that are for our Canadian clients that pay 25% or more. If you're not doing that well, you need to give me a call, and I'll sit down with you over the phone, discuss exactly what our programs are, see if it fits your investment style, and if it does, we can do some business together. Nothing is more important than our Canadian clients doing well at a time when Canada is in dire straits, obviously with extremely low oil prices and very heavy unemployment and a weak Canadian dollar. Our clients need our help, and we've always been there for our clients, just like our clients have always been there for us.
1-800-432-1022. Speak personally and privately with Harold, 1-800-432-1022. The call is free. Your conversation is confidential. Harold's website, rarecoloreddiamonds.com. Our featured diamond is a 2.09 carat emerald cut, fancy vivid, yellow, internally flawless. Go to rarecoloreddiamonds.com, click on featured diamond of the week. You will see it there. And as promised, here is the info we have on yellow diamonds, and it's very bullish. Fancy colored diamond prices rise on shortages and strong holiday sales. Fancy colored diamonds price increased, and this is in general all lumped in together, 0.3% on average during the fourth quarter of 2015, according to the Fancy Color Diamond Index. Mining companies, and this is quite interesting, they say that lower supply from diamond producers have led to a shortage of fancy yellow diamonds. Mining companies have effectively shut down a considerable portion of their rough diamond production, especially in Africa, around mid-2015, resulting in market shortages across color and size categories, and that is reflected in the index, put together by the Fancy Color Research Foundation, FCRF. Now, they go on to add, prices for the fancy yellow diamond segment performed the strongest, increasing 1.1%. And that was in a statement they had here February the 9th. Within the yellow category, 3-carat diamonds demonstrated a 2.7% price increase, and 5-carat stones rose 4.4%, likely driven by low availability in the rough tender. Now, they go on to say, out of non-yellow colored diamonds, the prices of 1 carat and 1.5 fancy vivid blues and pinks increased the most, advancing 4.4% and 3.7% respectively. And they add in this story that the market is clearly showing preferences towards fancy intense and fancy vivid at the expense of lighter colored fancy diamonds. That's a story we have in our free weekly newsletter. If you'd like to get it from Harold, connect with him at rarecoloreddiamonds.com, 1-800-432-1022 Harold. When you think about it, those numbers are very nice for one quarter, and sort of music to our ears, because this is what we've been talking about for a long time, and that is you're dealing with the rarest of the rare. They're like nature's art, and we're finding out that that is the case. Mines being shut down, no new mines being found. As a result, it's driving up prices, and we're not surprised in the slightest.
No, we're not. And the thing is that if they're showing that type of return, quarterly for yellow diamonds and lumping everything together, don't forget, on a yellow diamond, if it's flawless, internally flawless, it's the best that you can get. It goes up way more than anything that has a flaw in it. So the fact is, if they're lumping all the yellow diamonds into one category, whether they're heavily flawed or flawless, the fact is the overall marketplace has still gone up substantially. However, if you look at what the flawless yellow market is doing, it's doing better than any other market at this point, except for the blues and the pinks, which are really starting to skyrocket. The thing about blue diamonds, a vivid blue diamond with the highest saturation back in 2003 sold for $200,000 a carat. Recently, a vivid blue diamond, a very famous one, the Blue Moon diamond, sold for $48 million. It was a 12-carat diamond, so it sold for $4 million a carat. That's how much these diamonds are going up in value. We very strongly recommend that you look at the rare color diamond market at this particular point. It's more stable than any market out there. It never declines in value, and over the long term, it'll make more money for you than almost any investment that you have going forward. It's just an amazing marketplace.
And you talk about stocks, and Harold has warned us about stocks. Last Friday, and Harold mentioned this off-air to me, he said, wow, this LinkedIn, it's really getting hammered. Last Friday, LinkedIn shares dropped 44%, wiping out nearly $11 billion of market value. And that was because people were disappointed in their revenue. LinkedIn is a social media outlet that is for those that like to promote and connect with people within their industries. It's more business focused than, let's say, a Twitter or a Facebook. And it even gets more interesting because the tech stock wreck, and that's what we're seeing with the NASDAQ down very, very heavily, it has destroyed $529 billion this year. The bad year for stocks getting worse by the minute, and tech investors are feeling the brunt of the pain. $529 billion wiped off the charts. And in fact, there's a story we have in our free weekly newsletter. Scott Menard, Chief Investment Officer of Guggenheim Partners, coming out saying that he thinks the NASDAQ could go down very easily another 15% down to 3,800. But Harold, when people talk about risk, you and I have always found it very curious. When it comes to gold, silver, diamonds, you have something in your hand, in your pocket, wherever you may store it safely. It's yours, and it's not a paper promise. And it's something that is either, in the case of diamonds, nature's art, the rarest of the rare, or gold and silver, money, which has stood the test of time. And yet you have these tech stocks, and even a company like GoPro, their stock has just gotten decimated. I encourage you to look it up, GoPro. They had an initial public offering. It went up, and now it's down, I believe, down at least 80%, if not more. I haven't checked it here in the last week or so. The last numbers I seem to remember were down around 75, 80%. But they're just getting hammered. But, Harold, what a number. In one day, your stock down 44%, $529 billion wiped off tech stocks. And yet people are concerned about investing in gold, silver, and diamonds. It's something that you could hold in your hand that's yours forever, not a paper promise. So I think people need to re-educate themselves in the times that we live in, what risk really is.
I think you summed that up beautifully, because a stock can go to zero, but that will never, ever happen for gold, for diamonds, for classic cars, for art. It just doesn't happen. But a company can make a bad decision or do something wrong and be out of business, and you could lose every penny that you put into that investment. So, again, there's no conservative investments anymore in stocks. It's not the place for the everyday hardworking family. You're going to lose your money. 90% of the people that trade in stocks lose. If you're Canadian and you're in a retirement savings plan, there's a 90% chance that you have not made money in 10 years. Why is that a good investment? Why in the world would the government want you to be able to defer your taxes, invest your money in these type of risky investments, and never get anything for it? It totally defeats the purpose of doing that type of investment, because everybody is supposed to benefit from a retirement savings plan. The client is, obviously, because they get to defer taxes, put it into what hopefully is an investment that's going to grow over time, and not pay your taxes until you're going to cash out with a lot more money than you put in. And then the government will do better because they're going to make more taxes because your investment went up. But that's not happening. Nobody is making any money in mutual funds or in stocks, and they won't for a long, long time. And if you're just sitting there and letting all the hard work that you've done go down the drain, well, then shame on you. All you have to do is make a decisive decision. Please give me a call. I can help you. My clients are doing way better than the mainstream. My clients are in private investments with my firm that are safe, that are making over 25% a year. If you want to learn about it, if you're not making that kind of money, you need to give me a call, and I will love to speak to you and try to help you. So, again, it's one of the most dangerous times we've ever seen in the marketplace, and you need to do something, or else you're going to find that everything that you've worked for is going to go down the drain.
As an example, here we have Credit Suisse, as we mentioned, 27-year lows. I saw a story on CNBC's website, cnbc.com, and they were saying that over the last 20 years, if you were invested in bank stocks, you have not made any money. And if they have negative interest rates all around the world, I saw a very interesting interview on Bloomberg, and we have Bloomberg Canada now, that little show that they run in the afternoon. And they interviewed a man on there, an expert, and he said negative interest rates are just a killer for banks. You know, you need to have interest rates and make money on the spread and lend money out. Negative interest rates are going to kill the banks, not to mention insurance companies. Our featured diamond this week, speak with Harold personally and privately about investing in diamonds, is a 2.09 carat emerald cut, fancy, vivid, yellow, internally flawless. This is a big, chunky diamond. It's our featured diamond of the week. See it, rarecoloreddiamonds.com, and have Harold send out that story. Fancy colored diamond prices rise on shortages and strong holiday sales. Now, Harold, we don't like to scare people, but by the same token, we've always done our show. It's not about optimism or pessimism, but realism. And one of the things that's hanging out there right now regarding geopolitical concerns is this Zika virus. And there's a lot of people that are going to take place in the Olympics in Brazil that are questioning whether or not they should go. They're very concerned. The CIA director came out this week as well and said the Middle East is the worst it's been in 50 years with unprecedented bloodshed. And he's very, very concerned. One of the other stories was a top intelligence officer with the United States came out and said that ISIS is going to attempt a U.S. attack this year. And he was being interviewed by Congress. His name is Vince Stewart, director of the Defense Intelligence Agency, and he came out and said that ISIS, they really believe, from what they're hearing in the chatter, will potentially take a run at the United States. And Harold, with about 2 minutes left, we don't like to scare people with the Zika virus or some of the other concerns that are happening geopolitically, but it's something to take into account when you do invest. You need an insurance policy in your portfolio, like diamonds and gold and silver, as we saw this week when it looked like banks were potentially insolvent in the Euroland, and that was the concern. We saw gold up $60 in one day.
That sums it up beautifully, Randy, because the fact is that when things are happening the way they are in the market, look how gold responds to it. That's why we've always said don't trade gold, own gold, because, again, you never, ever know when something is going to change in the marketplace and gold is going to take off, and this week was the best example of that. Gold got down to $1,050. We were saying it could go to $1,000. We were in $50 of that, and now the market's all the way back up to $1,250. The market made a $200 move from its low just based on what's happening in Europe and China at this particular point. So I believe that really sums it up. Now, again, we do believe that the markets are going to remain volatile and certain things are going to happen in the market. Continue to stay tuned to the show, and we'll let you know every single week what we believe is happening. If you need to speak to me personally, if you're not making if your investments are not doing well, give me a call and I'll let you know what we're doing, and hopefully that will help you. But all in all, Randy, it was a crazy week, but all in all, a good week if you're in the right marketplace.
As you always say, Harold, there's always somebody making money. Thank you for another. That's right. Thank you for another great show and your knowledge.
It's my pleasure, Randy. I wish everybody a wonderful long weekend and a very profitable day.
That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.